Every single day millions of traders stare at their screens, watching candlesticks form, disappear, and reform. But here's what most don't realize. Those simple red and green bars aren't just showing you price movement. They're telling you a story of battle, of deception, of opportunity. The greatest traders in history didn't just see candlesticks. They read them like a language. And once you learn that language, the market stops looking random and starts making perfect sense. Today we're unlocking the candlestick secrets that separate amateurs from professionals. This is the Chain Catalyst, where we reveal the code hidden in plain sight. Why candlesticks hold all the answers. Before we dive into patterns, you need to understand why candlesticks matter more than any indicator you'll ever use. Think about it. Every RSI reading, every MACD cross, every moving average calculation, they're all derived from price action. They're lagging interpretations of something that already happened. But candlesticks? They're real-time psychological warfare captured in visual form. Each candle tells you 4 critical things: where price opened, where it closed, how high buyers pushed, and how low sellers drove it. But more importantly, it reveals who won that battle. When you see a long lower wick, that's not just a line on your screen. That's evidence of sellers pushing hard, only to be completely rejected by buyers. That's momentum shift captured in real time. The institutions that move billions don't rely on lagging indicators. They read order flow. They understand positioning. And they watch candlesticks like hawks. So if you want to think like smart money, you need to master the art they've been using for centuries. Your chart analysis toolkit. Let's break down the essential candlestick formations every trader must know. The Doji, the uncertainty signal. Look at this candle, open and close nearly identical with wicks on both sides. This isn't weakness or strength. It's indecision. When you spot a doji after a strong trend, especially near key support or resistance, it's warning you, the current momentum is exhausted. The question becomes, who breaks first, buyers or sellers? The hammer and hanging man, the reversal twins. Same body, different context. At the bottom of a downtrend? That's a hammer. Sellers tried to push lower but got absolutely rejected. At the top of an uptrend? That's a hanging man, a warning that buyers are losing control. The structure is identical, but the psychology is opposite. The engulfing pattern, the power shift. This is where the market reveals its hand completely. A bearish engulfing, a green candle followed by a larger red one that swallows it whole. That's not just selling, that's dominance. That's a statement. The reverse is equally powerful, when bulls completely overtake the previous bearish move. The pin bar, the rejection candle. Long wick, small body, positioned at the opposite end. This candle tells you exactly what happened. Price was pushed to an extreme, then violently rejected. When you see this at support or resistance, combined with volume confirmation, you're witnessing institutional level rejection in real time. But here's the secret most traders miss. These patterns don't work in isolation. Context is everything. Where patterns come alive. A hammer at random? Meaningless. A hammer at a 61.8% Fibonacci retracement level, after 3 consecutive bearish candles, with volume spiking? That's a signal. This is the art of chart analysis, combining candlestick psychology with market structure. The 3-layer confirmation system. Layer 1, market structure. Is this pattern forming at a key level? Previous support/resistance, round numbers, trend lines, or Fibonacci zones. If it's in the middle of nowhere, ignore it. Layer 2, trend context. Are we in an established trend or choppy consolidation? Reversal patterns work best after clear trends. Continuation patterns work best within healthy trends. In choppy markets, candlestick patterns become noise. Layer 3, volume validation. Did that hammer appear with volume surging, showing real buyer conviction? Or was it formed on declining volume, suggesting exhaustion rather than reversal? When all 3 layers align, that's when candlestick patterns become deadly accurate. The market doesn't just show you what happened. When you understand context, it shows you why it happened and what's coming next. Reading between the wicks. Now let's go deeper into the secrets most traders never discover. Shadow analysis, the hidden information. Every candle has a body and wicks or shadows. Most traders only look at the body, the difference between open and close. But professionals obsess over the wicks. A long upper wick tells you buyers tried to push higher but got absolutely crushed. A long lower wick shows sellers attempted to break lower but faced a wall of buy orders. When you see multiple candles with consistent rejection wicks at the same level, you've just identified an institutional zone. The 3-candle story. Forget looking at single candles. Start reading 3-candle sequences. First candle, what was the market doing? Second candle, how did it respond? Third candle, is it confirming or rejecting that response? Example, bearish move, small consolidation candle, explosive bullish breakout. That sequence tells you, sellers pushed, the market absorbed that selling, then buyers took complete control. Body to wick ratio. A long body with small wicks? Strong conviction. A small body with long wicks? Uncertainty and rejection. Pay attention to this ratio. It reveals the strength behind every move. When you combine these advanced techniques, you're no longer just analyzing charts. You're reading the psychological battlefield in real time. From analysis to action. Understanding patterns is one thing. Trading them profitably is another. Here's how to turn candlestick mastery into consistent execution. Step 1. Pattern identification. Spot your high probability formation at a key confluence zone. Don't force it. Wait for setups that check all your boxes. Step 2. Confirmation wait. Never enter on the pattern candle itself. Wait for the next candle to confirm direction. If it's a bullish hammer, you want to see the next candle close above the hammer's high. That's confirmation the reversal is real, not a fake out. Step 3. Define risk. Your stop-loss placement should be logical, not arbitrary. 4 bullish reversals, slightly below the low of your pattern. 4 bearish reversals, slightly above the high. The market already showed you where it was rejected. Use that information. Step 4. Target selection. Use market structure for targets. First target, recent swing high/low. Second target, next major support/resistance zone. Let the chart tell you where price wants to go. The difference between gamblers and traders? Gamblers see a pattern and jump in. Traders see a pattern, wait for confirmation, define their risk, and execute with precision. Why most fail even with knowledge? Here's the uncomfortable truth. You can know every candlestick pattern in existence and still lose money. Because knowledge without discipline is worthless. The market will show you a perfect setup, then make you wait. It'll trigger your entry, then test your stop loss to the exact tick before reversing. It'll give you 3 winning trades, then hit you with 2 losers that shake your confidence. This is where most traders break. They know the patterns, they see the setups, but they overtrade, they revenge trade, they move their stops, they exit early. Mastering candlesticks isn't just about technical analysis. It's about developing the emotional control to execute your edge consistently, even when it feels uncomfortable. The patterns don't fail traders. Traders fail themselves by not honoring what the patterns are telling them. The journey continues. So here's my question for you. What's been your biggest challenge with reading candlesticks? Is it identifying the patterns, understanding the context, or having the discipline to wait for confirmation? Drop your answer in the comments. I read every single one. And if you're serious about mastering chart analysis and thinking like institutional traders, hit that subscribe button. Because here on the Chain Catalyst, we don't just follow the market, we decode the patterns that control it. Remember, the market is always speaking. The question is, are you ready to listen? I'll see you in the next one.